what I see, especially with men, and I don't want to, make it a gender thing, but really in men is, kind of put our head down, have to work. And there's like this entanglement between our work and how much money we're making and what our value is, right? And there's a lot of shame around not knowing where we're going or what we're trying to achieve and the stresses of life all across the board and not knowing how to deal with them, or feeling overwhelmed by them end up taking us away from our kids, right? Naturally, right? And so I think for dads, the biggest part is one, being self-aware and being able to have conversations around, hey, I don't know something.
Welcome to the Company of Dads podcast. I'm your host, Paul Sullivan. We're focused on lead dads, working moms, and how small changes at home or work can have a big impact on their lives. Each episode promises to deliver actionable advice on some area of concern at home or at work. Short, direct, again, actionable. 5 questions, 5 answers. Today, our guest is Zack Pumerantz, a father of 2, a boy and a girl. He's gone from working at FanDuel to be an advisor focused on helping fathers and families make better financial decisions. If that doesn't sound salacious, what does? The focus of his financial planning business really resonates with me. Tagline is, a parent helping parents build strong financial foundations and lasting wealth. We're going to talk today about strategies, particularly to fathers and parents in general, around money. We're also going to talk about how pressure changes and financial opportunities ebb and flow around money as kids come into the picture. Zack, welcome to the Company Dads podcast.
Appreciate you having me, Paul.
You have an interesting story about how you became a financial advisor, particularly one focused specifically on parents. So I'd love for you to open by telling a little bit about that story, but then also, toward the end, answer the question, what really drove you to do this, and what do parents in particular need to know?
Yeah, so I had always been interested in investing, and kind of understanding, how to grow your money and the right ways to do it. And
which is why you went to FanDuel. So you see like double or nothing, triple or nothing.
Exactly. It's like the ironic, but it's funny because when I got to FanDuel, I had no idea what I wanted to do. There was a time where I wanted to be a sports writer. And when I got to FanDuel, risk management became my specialty. And then that was really in the early days of FanDuel. Now we see them on the ads everywhere, and it's a whole different thing, right? Whole different world. But, growing up, I had always been really interested in investing and finance, and I kind of went deep on that. And I noticed, people around me, people that had worked for me, coworkers, higher ups, really good at making money, but managing it was a whole nother animal. And so I was fascinated by it. I read the big value investors of the world. And then I started to realize that I could teach this, right? I think there was a lack of knowledge. It wasn't something that was taught. And as I got further, I wanted to have more of an impact. I realized that a lot of families struggled with this. A lot of people individually struggled with where to start, how to understand what to do with their money, how to understand taxes and kind of the whole environment that's built out there. And I think we live in a society that taught very much of stock picking and of getting rich quick, right? Yeah. And we're also in a society of spend now, of spend, buy now, pay later type of situation. So what I really wanted to do was teach people about how to actually build the right foundation, and really start from a place of how are you saving money? Where's that going? What are the specific investments you're doing? How do we actually manage risk, and improve our long-term outlook in a way that's patient and almost stoic, right? I hate to always, quote Marcus Aurelius, but it's like the stoic approach of control the controllables is really important. And I think not enough of us are taught that. We're kind of driven by society to think that flash and getting rich quick, which often is luck, drives our value and what we're doing in the world.
You're on the wrong podcast. Ryan Halliday is the stoic dad. So we don't even bring up the stoics here. As fathers, we like to just wallow in the uncontrollable. So.
Of course. And that's me. That's why I feel like you can look at things the right way if you are aware that we all struggle with that. Right. So I'm right there in that with you.
Before I get on to the second question, I want to drill down a little bit deeper because, when you and I had coffee a month or so ago, you had this role among your some family members, I think later some friends, where you kind of were the go-to guy to look things over and say, look, here's your financial plan. I'm not sure, if you're getting the best out of it. And so this for you really came from a place of like deep interest. It was sort of like taking something you're passionate, like being a hobby golfer and becoming a pro golfer out of it, or maybe being a hobby golfer and becoming a golf coach. It was really, what was it that drove you to want to, figure this out when it came to sort of financial plans and help your friends and family?
I think it's almost a situation where, yes, I was really interested in it. I think my grandfather for that, he got me into it young, and then I kind of took off with it. And we always loved challenging each other and having really deep conversations about, really, again, investments is where it started, but financial planning and an environment is so much beyond that. When it came to friends and family, I think I always had this kind of assumption that the world was experts. It's like when people go into the workforce and they think everyone knows what they're doing, and then they realize nobody knows what they're doing. So over time, it started with some family. They knew what I knew and kind of, knew I was into it. And so I would start looking at things, right? And then even friends and some extended family would start sending me, hey, here's what my advisor is sending me, right? Like
Yeah.
most people have an advisor. And most of the time, that's just a portfolio manager who you meet with once a year. They tell you you're doing great, and then you move on. And I kept seeing the same thing, right? It was this cookie cutter portfolios based on a risk survey that someone took one time. Um, a lot of baked in, costs and things that they might not be aware of. And, I think the idea was, hey, I can teach you to do all of this, right? Like you can, the stuff that you're getting from that advisor, you could do on your own with kind of just kind of a run through of an education. And over time, as I kind of continued to go through portfolios and help people, which I'll be honest, that was like something I would do for free, and it was the most fulfilling thing in the world, right? And so if I'm doing it for free, I know it's something I love.
Yeah.
Going through that over and over, I felt, wow, I can really actually change lives. Like I think I can really, this is way more impactful than what I'm doing at a corporate level, right? And I think helping families and creating security in a way, because money ultimately is security,
Mm-hmm.
by building something and educating people on what it all means, which they're not usually getting, um, really made me feel the best version of myself.
I love it. Question two, let's drill down a little bit here. The word provider is one at the company dads that we strive to redefine, particularly as it pertains to dads, to fathers, because historically the word provider means the guy who goes out and makes money and brings the money home, and we really work to talk about provider being more holistic. Obviously earning a living is very important, but also being there for your family, being present when you're with them. The second question is, what are some of, the real emotional pressures that dads feel around money, and how do you help them deal with those pressures?
That's a great question. I think that we're we're taught that we can't be vulnerable and we can't um, look at ourselves and really change our minds, right? And I don't know who said this, but I heard this and it really resonated, which is, what's the point in having a mind if we can't change it? And so part of what I see, especially with men, and I don't want to, make it a gender thing, but really in men is, kind of put our head down, have to work. And there's like this entanglement between our work and how much money we're making and what our value is, right? And there's a lot of shame around not knowing where we're going or what we're trying to achieve. And, and I don't even mean this financially 100%, but really like the stresses of life all across the board and not knowing how to deal with them, or feeling overwhelmed by them, end up taking us away from our kids, right? Naturally, right? And so I think for dads, the biggest part is one, being self-aware and being able to have conversations around, hey, I don't know something, right? Or I struggle with this X, Y, and Z. And then the second part is knowing where to start. And they're not taught that. It's like we're not taught emotional intelligence in school. We're not taught financial literacy. We're not taught any of these things. So how do you untangle these years of, for lack of a better word, bad habits or lack of awareness of how to actually make things potentially more successful and actually take stress off. Um, that's where I feel like our work comes in, where people think of finance as just spreadsheets and stock picking and,
Yeah.
what's my rate of return, but it's so much more than that. It's what's your foundation? What are the goals? How do they fit uniquely into what you're trying to build? And that's not a cookie cutter portfolio. That's really an environment, a house that we're building.
Give me a specific example or two, of how you've helped somebody like you.
Yeah. So, I mean, listen, and this is at all income levels. I mean, you could be making millions of dollars and you can't save a dime, right? And so, really, it doesn't matter how well your investments are doing if your rate of savings is not improving. So, I think people left and right, they don't understand, and I'll keep it a little focused for now on investments. They don't necessarily understand the risk that they have, right? A really good example of that is they might have, you know, a bunch of stocks or a bunch of index funds that potentially are overlapping. And so their exposure to certain areas or their exposure to a single stock is a lot higher than they realize. And that creates a lot more volatility in their environment than they even understand or want, really, when you actually have a conversation away from finance about it with them. And again, everybody's different. So I don't want to one size fits all it, but I think one of the biggest things I do with people is, yes, investments are important. And yes, that I love talking that and having that conversation. And, it's definitely a big thing we focus on. But beneath the surface of that, the foundation of the house is cash flow. So I'm much more interested in what is your rate of savings, right? And that's a system that I think, listen, we're all taught to put our best asset, and I don't know if enough people think about it this way, but our best asset is our income, right? And
Sure.
so most people are taught best asset, direct deposit goes right into my checking account. And from there, it blends with life. Everyone's spending on life. We've got kids that gets more expensive every year. And everyone, most people have the intention of wanting to save, right? And they struggle with it. This is something I constantly hear of, like a lack of awareness or clarity into cash flow. So rebuilding a system, even at that level, this sounds extremely simple, but even reworking your cash flow system and creating a separation between your income increases and making sure your expenses aren't increasing at the same rate as your income, that type of foundation makes you an unconscious saver rather than a spender, which is what we are all taught to do,
Yeah.
and we're marketed to this by banks to say, hey, spend, open up checkings, do these things. But how do we rework the system underneath so that we don't need willpower or constant budgeting to cut down what's stressing us out?
I love that. Question 3, and you kind of alluded to it in the second part of that answer there. Let's assume we're a couple, husband and wife, husband, wife, that part doesn't matter. You meet, there's a stage in our lives, you get your first job, doesn't pay so well, second job pays better, third job, so on. Hopefully you keep making more money, then you meet somebody, get together, and you have this sort of halcyon period where you're both earning money together and your costs are less because you're in a home or an apartment, whatever. And you feel like, wow, I can do anything. And I've seen this so many times. I say it's the fancy car that people have before they have children. And, it's like, wow, look at them. They've got a Porsche, they've got a BMW, they got whatever. And then as the kids come along, kids are expensive, at least for the purpose of this podcast, talking about money. And they cost. And so you have the first kid. Okay, we got this. You have the second kid. And everybody's focused on childcare. Childcare, very expensive in the beginning, but kids, they continue to be expensive in different ways even after you get them into school. And I think too often what happens is that people don't adjust their expectations because they're thinking, okay, we're both working, we're doing well. Here's what we're building toward. But at some point, their mindset needed to change because yes, they need to save. Yes, they need to maintain their income, but they also have really big expenses in life. How do you help fathers in particular come to terms with that change? I often equate it to sort of, if you're not careful, you're that lobster sitting in the pot, and the lobster's fine in the pot and the heat keeps getting turned up, and next thing you know, you got a boiled lobster. How do you help dads not become that boiled lobster, and how do you help them find a healthier mindset around money, particularly as you said earlier in this podcast, how do you help them actually change their mind, change things that they used to do to make it, healthier for them and for their families?
It's a great question. I think, we think we're rational creatures, and in reality, it's all emotional, right? For all of us. So I think when it comes to that sort of thing, again, it comes to being honest about what's there and what, might change, right? Like the realities of parenthood and how that's going to go. But I also think part of our approach and what I really like to focus on with new parents especially is here's like a playbook, like a financial family playbook
Do you
of
do with new parents? Or do you have like an illustration? And there's like a
yeah,
cliff, like everything's going
yeah,
along, and then like the cliff is right here.
exactly. Here's a drawing of what's going to happen, but here's a layout of, here are all the things that are going to change a little bit, right? And
Right.
it's just being honest, right? It's not here's a dump, email of things that are going to go on, but let's work on this together. And here's the roadmap of things that are going to change. And then what we're going to do is we're going to coach you through those things and give you opportunities or show you areas where you might not have known to look. So you don't know what you don't know, right? And so even at a simple level, I think of, well, benefits through work, ways you're funding different accounts you can set up, benefits from a tax perspective you get. All these different things,
Mhm.
again, are not, kind of the silver bullet to it, but they will be different parts that help organize. Okay, now I kind of have a little more clarity of what to expect and where I have some opportunities which feel like small wins.
Yeah.
And then over time, from a place like that, it's almost like a lot of this is noise in our heads. And so we sit there and we kind of have it just filling up. And it's like, I have to do all these things. And if we can really just
Are,
put
are
it
you are
down,
you in my head right now? My head is full of noise. Are you
I,
that type of
it's
advisor?
like,
You're like,
that's us. That's both of us. So I think the ability to kind of lay that out and say, I've got you. Here's some clarity. We're starting to fill in the painting together.
Mhm.
It gives them a little more clarity, which opens up space for them to kind of see what's going on. I think beneath the surface of that, a lot of this, and this happens in couples all the time, is people bring up beliefs and conversations that they had with their parents or with their family, especially at the dinner table. And you can learn a lot by someone by asking them, like, what were the conversations you had at the dinner table?
Yeah.
And so then you really see, okay, one person is terrified of debt, of even a historically low mortgage. The other couple is the spender. I mean, the other, the
Yeah.
spouse is the spender, right? And they're just doing, so there's like this conflict that's, maybe hasn't even come up yet, but you start to really balance the environment together and say, hey, here are the things that are going to happen. We know where everyone is. Here are the steps we're going to take because the antidote to anxiety and stress, I think, is action a little bit. It doesn't eliminate it, but I think it's a good step.
Mhm.
And then beyond that, it's like almost working with them along the way, but not just here's the things you do financially, here's how it's going to feel. And I know it's terrifying. And here's the stuff
Right.
that's going on. And here's the way we deal with that, right? It's like giving them actionable items to work through. But you have to untangle like that, you know, the inherited habits that they've had through their mindset,
I,
through
lo-
history of family.
No, I love that. My previous life, writing about money at the New York Times, I got to know this guy named Brad Klontz, and Brad Klontz, he's a psychologist of wealth essentially, and he talks about money scripts. He's written a lot about money scripts, and those are sort of the inherited beliefs that people have, and that's without calling it that, that's what you're talking about. And he always gives this great example, a simple example, like mom and dad, two kids, they're about to lose their house, and what happens next is really what's going to impact their kids. In scenario one, mom and dad figure out a way themselves to hold on to the house, and that becomes the family story. In scenario two, mom and dad get help from their parent, from the grandparents, and they save the house. That's going to create a different money script. And scenario number three, mom and dad don't figure it out and they lose the house, and that creates a different money script. So I think it's so impactful what you're doing, because you just, it's the classic, you can't judge a book by its cover. Like, you see these people, they come in, they're having some success, they've got, good jobs, they know where they want to go. But unless you know how they feel about those simple things, it's going to be really hard to put together a plan that will reduce their anxiety and that they'll stick to.
Well, and that's 100%. I think that's also understanding, and this is not just finances, everything in life, but I think it really is, especially in finance, that money is such an interesting, you know, it kicks up such interesting emotions, right? And it's so much beyond, it's security, it's shame, it's all these different things.
Yeah.
And I think, in a weird way, where there's some therapy to this, where it's like,
Yeah.
let's talk about it, let's be real. Um, and once you can open that with people, which is not always easy, but to open up that part of them and say, hey, yeah, I don't know, right?
Right.
Or here's what I've dealt with. The awareness is key to everything else. But if we're stuck in this place of, well, just don't ask, I don't want to have conversations about it, like at a family level, like they don't want to talk, which a lot of times they've grown up in an atmosphere of that. That shows the kids that, hey, this is something we don't talk about, like we
Yeah.
ignore. And then it's hard to get better from there.
Yeah, and money becomes something that it isn't. I mean, money is a means of exchange, but one of our big problems in America is money has all this psychological baggage attached to it. So, question 4. This is the company of dads. We've been talking a lot about fathers, but our tagline is helping families fulfill their full potential. So, what can you do, or what do you do specifically to help both parents come together around financial decisions, particularly as that pressure to juggle more and more at home ramps up?
Yeah, I think, I would probably go back to a little bit of the last part, which is, it's really about opening the door for conversations that
Mm,
aren't financial, right? So I think, listen, everyone wants to make more money. They want to grow their money. They want to save better. They want all those, kind of higher level, almost obvious things. Of course, we want those things. But when you take it away from finance for a second, you say, let's just talk about life. Like
yeah,
what does life look like? Forget finance, forget the type of account, the type of this or that, or trust, whatever it might be. What do you want this to look like? And let's start to align on those goals. And I think a lot of times you kind of just let people run with it, right?
yeah,
You don't sit there and tell them, hey, do you want this? Do you want that? It's kind of like, talk to me on a human level of what you're looking at. And then we start to overlap those goals together and say, here's how we're going to serve those things. I think my industry, and I think this is what kept me away for a long time, is inherently transactional, right? It's like, hey, there's this product, there's this investment, there's this thing, there's X, Y, and Z. For us, it's really about, the conversations are, what are you trying to achieve? Everyone's different. This needs to be like a bespoke approach. What are you trying to achieve? And how do we find the things that help you get there? Right. Because you are going to be different than the next person, and, it's different than the next family. But from a couple level, I think it's really about, and it gets very interesting when you go through those dynamics. Um, Talk to me on a human level of what you're thinking. And listen, people are all different. Like my wife and I are very different too. It's like, how do you, but it's really bringing it together and saying, what do what are you guys trying to achieve as a family? And then at an individual level, how can we work through the things that you go through emotionally and financially to almost build a system around those things, right?
yeah,
So if one's a spender, one's a saver, one's terrified of the market, one wants to be really aggressive, right? There's all these different things. Um, how do you blend it together and create an environment that supports all of that? Right. And I think that's why for us, it's really the environment and it's the balance. It's not just you do this thing 100% and that's it. It's the environment.
I mean, there's obviously always a huge element of psychology when it comes to money and investing, but it almost sounds here like, I mean, do you find yourself playing the role of like traffic cop to make sure that, if these two people say we're going to do the following things, or the following things matter to us, you make sure they're not going, 50 miles an hour in a school zone, or, pulling over on the Merritt and blocking up traffic?
Well, you mentioned it earlier of where, they used to have the nice car. And the way I like to frame it for them is, you can still have the nice car, but you need brakes on the car. Right. And
Right.
so part of what we're doing is, in order to go fast and do all these things you want to do, we need brakes. And brakes are understanding your risk level and what's going on across your environment and how different things are used, how investments perform better, ideally by not touching them, depending on what they
Yeah.
are, right? And working on savings, making sure you have the foundation to take care of the things that are going on. A really good example of that is, you meet people all the time, and they might be struggling with something specific. Like they might be trying to save more, but they can't, or maybe they've even got debt
Yeah.
that's high interest on a credit card, and you learn that they're also funding their 401k or their 529s for their kids at a higher rate because society told them that if they didn't, it was the wrong thing, right?
Right.
And yet that's not actually helping their goal right now. Again, there's always time. I don't lightly say don't do that. But if we look at a specific situation at that time for that person, I want them to know, hey, this is conflicting with what you're trying to do on this side. And a lot of times it's like people struggle to look at the whole environment, and it's not their fault. It's just kind of like they haven't been framed this way. And so if we can look at the whole thing and say there's almost like some cognitive dissonance here where you're aiming for one thing and your goal is this, but you're going against that here, just having those conversations and not saying it's bad or it's anything like that, but just having them understand that and giving them different strategies to think about. I do find it to be like freeing too. It's almost like instead of a traffic cop, I do sometimes feel like a family therapist where it's like, we're trying to prevent divorce because most divorce, and that sounds, extreme, but I feel like most divorce ends up, because of money. So if we can really work on the money and the alignment and the open conversations, the strategy will come and all the fun stuff we're going to do together. That's great. But like the foundation and the emotions is what's actually going to drive a lot of the decisions that come in.
This is awesome. Question, 5. Has your definition of wealth changed since becoming a father?
For sure. I think that I grew up like most of us where it's, what does your job look like? How much money are you making? What's your portfolio look like? What's your rate of return? How are you building up your kind of, nest eggs? And as you become a father, and it's not easy, it's a struggle for many dads, and it can be isolating too, of having to deal with a lot of things that you haven't dealt with before, and having to make a lot of decisions there. I think the definition of wealth for me has changed into more presence and security of like, I want to make sure my family's taken care of. I want to make sure that I can be with my kids and have the freedom to not be locked into work all the time. Right. I love what I do. I also want the freedom to be with them and to make decisions that are better for them, right? Where I can be at their practice or their games or, that type of thing. I think wealth, when I really reflect on it and think about it, unless you're really interested in it, I don't think people care so much about investing. They really have been taught to be obsessed with it, but in reality, they just want security. They just want to know they'll be okay, right? And so ultimately, if you reframe that with people, and I think for me, I've looked at it for myself where, I want to build security for my family, but have the freedom and, the, ability to be present with them, which is tough. I know for so much of, of the world now, we've got our phones, we've got work, it's nonstop, and it's hard to disconnect sometimes. So I think wealth for me has changed to, it's very much a family focused thing.
I was going out on a limb with that question. I'm so glad you didn't say like, when I was at FanDuel, I always doubled down on the New York Jets. Now I bet on the New York Giants. They're a better bet. I'm so glad that wasn't the answer.
I'm a lifelong Jets fan. I'd never bet on the Jets.
Oh my goodness.
Never bet on the Jets.
Because you are a lifelong fan.
Yeah, never bet on the Jets.
Bonus question here. Call it 5B. You can just answer personally, you can answer it from your clients, but what do you think are the financial values that are most important to model for your children so they actually see you embracing them and instead of listening to you tell them? Well, what are those values that you think are most important to pass down?
Patience and consistency, I think, is key. It's boring, right? It's not exciting. It's not flashy. It's not, they bought some stock and made 1,000% on it, right? It's not the flashy stuff that people on social media will tell you they're doing, which you don't see all the people that fail at that, right? You only see the good stuff. So I think with my kids, it's really about trusting their process and their gut and, doing, really just understanding what they're doing, being self-aware, but being consistent, right? I think that too many people react emotionally to what's going on in headlines constantly, right? It's all about headlines. Their whole financial environment is driven by what's going on that's not in my control, right? And so a lot of financial success really is based on emotional, steadiness. Listen, we're all anxious and stressed out, and we run through all these different emotions. But if you can be aware of that and you can set up almost like guardrails and systems for yourself, you can be successful. It's like you read the stories of people with very modest salaries who for years continue to compound, dollar cost average and compound for years, in a really low cost broad index fund at a basic level. And they can, really make a nice nest egg for themselves. They weren't trying to chase big
then
things.
They die in the small house, and they leave like $11 million to the local library. And you're like, why didn't you buy the beach house? Come on.
I know. Well, that's what they wanted, right? Look at Warren Buffett. He lives in like a $31,000 house that he bought years ago. And, I don't think he drives his old car. I mean, I love it.
He does fly net jets everywhere. So I don't think he's waiting in line,
exactly. Yeah, of course not. But, it's really about, having patience, I think. And we all struggle with that.
Zack, this has been remarkable. Thank you for being my guest on Company Dads podcast. Before we sign off, tell people how they can find you. How do they find you if they want to talk to you more about what you can do for them?
Appreciate you. So our site is im-financial.com. You can email me at Zack Pumerantz, ZackPumerantz at im-financial.com. We have a blog where we write about a lot of different things. We have a podcast that we're trying to get to this level. So you can definitely find us. And we're always here to have a conversation, and look forward to all of those conversations and, hearing about people's experiences.
Perfect. Thank you, Zack, again for being my guest on the Company Dads podcast.
Appreciate you.
Thank you for listening to another episode of the Company of Dads podcast. I really appreciate you tuning in week after week. Just want to use this moment here to thank the people who make it possible. Number one, of course, Helder Mira, who is our podcast editor. We also have Skip Cherryholmes, who many of you know from the Lead Dad Diaries. He's taken over our social media. Terry Brennan is helping us with our audience development, and Emily Servin is there each and every day helping with the web development. I can't do any of this without an amazing board of advisors. So I just want to say thank you to all of you who help, and I want to say thank you to everyone who listens, and hopefully you'll tune in again next week. Thanks so much.